Hey there, if you're a freelancer, small business owner, or side hustler, or anyone who uses payment apps, you need to listen up. The IRS made some big changes to how they track your income in 2024, and these changes will mean a much bigger tax headache come tax season. No one wants surprises at tax time, so let's make sure you're prepared. In today's video, we're breaking down everything you need to know about the new 1099-K reporting rules, what's changing, how it affects your 2024 tax filing, and what steps you need to take right now to avoid any issues. Trust me, you don't want to miss this, especially if you use services like PayPal, Venmo, or Cash App. Sit back, grab a pen, because you'll want to take notes for this one. And by the end of the video, you'll be ready to tackle these changes head on and file your 2024 taxes with confidence. Hi, I'm Noel Lorenzana. I'm a CPA. I've made a bunch of 1099-K videos, which I put together in a playlist, and I'll link that up here. All right, let's dive into what's changing. For 2024, the IRS has lowered the threshold for payment processors like PayPal, Venmo, and Cash App. If you've received over $5,000 in total payments from customers or sales through these platforms, you're going to get a 1099-K form, and the IRS is going to know about your earnings. This is a big change because before the rule was a $20,000 threshold and 200 transactions. So unless you were doing a lot of volume, you might not have ever seen a 1099-K form before. But now, if you just hit $5,000, you'll get one, no matter how many payments you've received. This matters because if the IRS knows about it, then you definitely need to report it on your tax return. In short, if you get a 1099-K, you can't ignore it. It's going to be used to track your income, and that means you need to report that income accurately on your taxes. So even if you were selling some old stuff on eBay, you need to report it on your tax return. Otherwise, the IRS will assume it's all taxable income. And if you don't, they'll send you a big nasty bill. But maybe it's actually transactions that resulted in a net loss, a personal net loss, which is fine. But you still need to report that on your tax return, showing that it was not taxable income. I hope that makes sense. Now, while 2024 is set at a $5,000 threshold, there's something you need to keep in mind for the future. Starting in 2025, the threshold will drop even further to just $600. That's right. If you receive $600 or more in payments from services like PayPal, Venmo, or Cash App, you'll get a 1099-K, and the IRS will be watching. This change is huge because it means a lot more people, especially those with smaller side hustles or occasional income, they'll be impacted. So while it's not something you need to worry about this year, it's definitely something to keep on your radar for next. Just so you know, the payment app Zelle is not subject to 1099-K reporting because they're considered more like a bank. And just a quick disclaimer, unless something changes, and we all know how tax rules can change, the $600 threshold is what we're looking at for 2025. So if you're someone who typically makes a few small transactions on these payment apps, 2025 could be a huge wake-up call for you. Now that you know what's changing, let's talk about who really needs to pay attention to these new rules. The short answer, if you're a freelancer, a small business owner, or you're running a side hustle, you could very well be affected. Actually, anyone for that matter. If you're getting paid through payment apps like PayPal, Venmo, or Cash App, or other similar platforms, and your total payments for the year hit $5,000, you're going to get a 1099-K. It doesn't matter if those payments came from one big job or a bunch of smaller payments. You'll likely get that form from the platform. One key thing to note is that you don't need to hit $5,000 from just one person. It's the total amount across all your transactions you receive for the year. So if you've got several clients or customers sending you payments throughout the year, add it all up. If it exceeds $5,000 on any one of those payment platforms, the IRS will know about it. And like I said earlier, starting in 2025, this will affect a lot more people because the threshold drops to just $600. So you'll want to start paying attention to your totals now so you're not caught off guard. All right, let's talk about the tax implications of getting a 1099-K. Now, just because you receive this form doesn't automatically mean all of it is taxable income, but you do need to report it. If you're receiving payments for goods or services, that income is taxable. For example, if you're getting paid through PayPal for freelance work or a product you sold, that income needs to be reported on your tax return. But not everything reported on a 1099-K is taxable. For example, if what's reported is money you receive as a gift or a reimbursement, that's not considered taxable income. However, even if you know it's not taxable, you still need to report the payment total on your taxes to avoid any red flags with the IRS. So when you receive a 1099-K, don't automatically assume all the payments are taxable. You'll need to go through your records and determine what's taxable and what's not. But the bottom line is, you can't ignore the form. You still have to report it, even if the income isn't taxable. Keeping good records throughout the year, like tracking invoices, payments, and any non-taxable payments, can help make this process way easier when tax time rolls around. Okay, now that you know what income is taxable and what's not, let's talk about how this will affect your 2024 tax filing. First things first, if you get a 1099-K, you'll need to report it on your tax return. This form is a signal to the IRS that you have received income and you need to report it. If your reported income doesn't match what's on the IRS form 1099-K, the IRS will likely catch it because they have this matching program that they do. If it doesn't match, it could trigger penalties or delays. So when you're filing your taxes, the income from the 1099-K typically goes on Schedule C, profit or loss from business. That is if you're a sole proprietor, freelancer, or small business owner. You'll report it alongside your business expenses to calculate your net profit. If you're working with tax software, it'll ask you to enter the totals from the 1099-K, which will be added to your overall income. But keep in mind, if you're already keeping track of your income through a proper bookkeeping system, then the payments are probably already accounted for. So you don't want to double those up. Now, if you want a step-by-step guide on how to actually report your 1099-K income on your tax return, I made a detailed video about it and I'll link that up here. In that video, I walk you through how I handle it using my tax software, including some of the most common examples. The key takeaway here is that you need to be sure that the amounts match. Double check your 1099-K against your own records to make sure everything is accurate. Now that you know the key changes and how they impact your taxes, let's talk about what you need to do right now to stay ahead of the game. Step 1, track your payments. First, if you're getting close to that $5,000 threshold in 2024, start tracking your payments. Keep an eye on how much you're receiving from PayPal, Venmo, and Cash App. If you're running a side hustle, you may not think it adds up, but it can sneak up on you. If you need help with your bookkeeping, I've got a great mini course that I'll link up here. Step 2, organize your records. Make sure your records are organized. Go through your transactions and make sure you know where your income is coming from. This is key for tax time, but it'll also help you spot any problems or discrepancies when the 1099-K form arrives. Step 3, double check your 1099-K. When the 1099-K arrives, check it carefully, compare the amounts reported on the form with your own records. If there's an error, get it corrected with the payment processor as soon as possible. You don't want to be filing with incorrect numbers. Now, if they won't correct it, leave a comment below because I can share some ideas for you. Step 4, don't wait until tax season to deal with this. The earlier you get your records and 1099-Ks in order, the less stress you'll face when it's time to file. Being proactive now can save you headaches later. Step 5, consult a professional if you need help. So if all of this seems a little too overwhelming, don't hesitate to reach out and hire a tax professional. They can help you make sure everything is in order and that you're filing correctly. All right, that's everything you need to know about the new 1099-K rules for 2024. These changes might feel like a lot to keep up with, but if you stay organized and proactive, you'll be just fine when tax season rolls around. Remember, don't let these changes catch you off guard. Track your payments, verify your 1099-K, and make sure you report everything accurately. If you need more help, check out the video at the end for a step-by-step guide on how to report 1099-K income on your tax return. I'll also link up my playlist. If you found this video helpful, please hit that like button and subscribe to stay connected. And if you have any 1099-K questions, leave a comment below. Thanks for watching and see you in another video.